core purpose of exchanges must be to create jobs. If it's not creating jobs, if it's really just trading derivatives, then where is the value creation? If it's not encouraging the new generation of investors, allowing them to put money behind companies that they relate to, that they are supporting, because these companies are solving problems that will impact us in the next 10 years, 20 years.
Welcome to Analyse Asia, the premier podcast dedicated to dissect the pulse of business, technology, and media in Asia. I'm Bernard Leong, and we are in the midst of an economic downturn. This brings about major changes in the financing of private companies, given that capital has been cheap over the last decade. How will the market for companies raising private rounds look like with rising interest rates, inflation, and supply chain woes caused by war and pandemic? With me today, Kelvin Lee, co-founder and CEO of Fundnel. This is a conversation which I have looked forward to, and we don't have the luxury of the perfect timing in such times. Kelvin, welcome to the show.
Thank you, Bernard. Thank you. I know we have been trying to schedule a good time for this. What better time than now when there's so many macro events happening that's going to affect, the private capital markets. So thank you for having me in.
And also, given that we have so many beers and so many drinks and talking about the private markets, I thought it's a real good time to get you on the show. Of course, being a first-time guest on my show, the first thing is your origin story. How did you start your career?
Don't forget our biosphere idea as well, Bernard.
Yeah, that's definitely.
It's related to my own experience, essentially, when I graduated from school. So I graduated actually from a local university in US, but unfortunately or fortunately, a month before Lehman collapsed. So I was fortunate in a sense. I actually managed to get a job in finance. So I started within the global markets team at Standard Chartered doing corporate finance. But my peers back in school, they were all actually, depending on how you look at it, different trajectories for career. So they couldn't get jobs. But because they couldn't get jobs due to the financial crisis back in 2008, they were forced to start building businesses. So I think back in school, a couple of us actually tried various entrepreneurship ideas, including my own experience of trying to think about how better to visualize our world, so handicapped people who are not able to travel and experience the way we travel the world. So I actually started filming the streets of Orchard Road and getting a software developer to visualize Orchard Road so that people can actually walk using an avatar and experience shopping on the streets of Orchard Road as an example, right? So all the way from since then, right, I really had an idea that I needed to use my time, my experience to actually make a difference to the world. But obviously, because of the financial crisis, I was forced into a career in finance. So I started out, as I mentioned, in Standard Chartered, subsequently joining JP Morgan as an investment banker. And really, from then on, the career trajectory was set, riding the wave of many capital market activities from IPO, initial public offerings for Manchester United's dual listing, all the way to even working on local listings on the Singapore Exchange, to exploring different listings in the US or even North Asia, right? So it's really a wave of listings that I was a part of. I was just along for the ride, just really learning about all the different capital markets, all the different companies that I was serving. And then what hit really was one of the last deals I did for a company in China, whereby the founder basically was a tech entrepreneur and he was really frustrated with the banks. And he said that if I could actually raise capital without going through the typical investment banking roadshow, flying halfway around the world for one or two meetings, and I can raise it on a platform, I will do so in a heartbeat, right? So I remember China actually skipped a phase, if you would. So they actually went straight to mobile. So the banks were not something that entrepreneurs were very used to. They actually could see a world almost immediately without investment banks being a part of it. So I think that's how this whole thing started. I did a lot more research on what is preventing a private company from going directly to the investors or the capital market without the banks, or really what is the role of underwriters or what is the role of banks. And I realized that there needs to be a quicker way, a more sustainable approach, a more cost and time efficient method for them, these new generation of entrepreneurs starting companies, to access the capital markets without spending a significant amount of time and money with the bankers, right? And I think that's how this whole thing started.
And I think that it was interesting just how you pointed about trying to have a virtual mapping and allow disabled to come in. So in today's world, we would call that the metaverse, right?
Actually, the funny thing was it was called Second Life back then. And
Yes, I know.
yeah, so this is something that I think if you watch some of these new Netflix documentaries or art fiction kind of shows, there was this show called Billion Dollar Code or something about how a bunch of programmers from Berlin actually started the same mapping engine that eventually became what we know as Google Earth.
So before we get into the story of Fundnel, I would also want to get your point of view. What would be the interesting career lessons you would like to share with my audience?
Sure. So I think the way we thought about careers back in the banks were really about incremental, what I would say, experiences. So it's deal after deal, checkbox after checkbox. So from a junior analyst, you learn as much as you can, you work on as many transactions as you can. And what I started to realize was when we were young, the only thing we have is really our energy, our time, and our enthusiasm as such. And so my biggest advice or takeaway from that is that, especially when you're first starting out, don't take your time for just a little bit more money, and really think about opportunity costs. Think about why you're doing this. I think there's a book by Simon Sinek called Start With Why. So I think going through the 5 whys, really asking yourself why you're doing this would have been something that I should have done earlier. And that it doesn't mean that you actually have to go build your business immediately, from school, even if you have no unique insight or there's no real pinpoint for you to solve. But I think having the process whereby you start asking yourself why you're doing this, why is this interesting to you, and then finding out what drives you is, I think, number one lesson for entrepreneurship. And I guess anyone starting out in their careers, don't go for incremental differences in money. Don't go for check boxes. Don't go for trying to earn trophies, essentially, because after 10 years, you finally realize that you collected all the trophies, but ended up with not much life experience. The biggest takeaway that me and my founders got was really this journey taught us a lot about ourselves. Learning what drives us, learning how we can create is something that is irreplaceable.
And that comes to the main subject of the day, which I want to talk about Fundnel and the private markets, whether it's from global to Southeast Asia. Before we start our conversation on the story of Fundnel, it will be great to baseline our conversation to the understanding of private and public markets. To start, can you define the private and public markets and explain why there exists what we call a great divergence between these two markets, given there is friction for any investor out there to press a button and buy a stock, say Tesla, or even by taking a private company, say Bioformis or Shopback in Southeast Asia?
Yeah, sure. So I think private markets are where people can purchase shares in private companies, basically shares that are not currently listed on an official stock exchange, such as the SGX, Singapore Exchange. And it's usually dominated by venture capitalists or private equity investors, angel investors, etc. And the funny thing is that, maybe just to sidetrack a little about who exactly are we serving in this company, we started the platform essentially to serve not just the institutional investors that I mentioned earlier, the VCs, the PEs, the sovereign wealth funds that are actually active investors in private companies. We left to actually build a platform for regular guys like ourselves. We worked in the banks, we understood the risks, probably qualified as an accredited investor, but we could not actually align our own personal portfolios with, I guess, what I would call personally the best performing asset class for many decades, which is private equity or venture capital. It's not historically reserved for the super wealthy and institutional investors. So I think the private markets is really their realm. Regular guys like ourselves, we hear about it, but we have very little access or insight into it. Imagine you heard about a bunch of kids in the startup co-working space who are running classified services for pre-owned goods, where they made pre-owned goods look cool, sexy, sustainable now, and say you wanted to invest in these young people. How would you do it? You needed access to them, you need to get their trust, or you have friends that are famous VCs who like these people. Otherwise, there's really no way, very little way that you and I can actually invest in them. But even if you did get a deal to invest in these companies, at a ticket size, which is a minimum investment check size that is friendly enough to allow more people to participate in for their own personal portfolio.
I can think of today's world, we can think in global wise, say in the US, we think about it like angel list syndicates. But when I come back to what you are working on, what is the inspiration behind Fundnel and what are the key problems which your platform seek to address?
We started out thinking about how we can actually democratize private markets, really thinking about access, I mentioned, right? So access for more people, but really thinking about, okay, so after investing in these private companies, what is the next big pain point that's going to be your impediment, right, to invest more in private companies? And I realized that that's actually liquidity. So a couple of years later, after you invested in the company I mentioned earlier, you're going to ask, can I exit this investment? Can I actually get some money back? Can I take some money off the table? Which is essentially, if you think about capital markets, it is a risk transfer mechanism. And without liquidity, there'll be less and less people that are willing to take the risk. And therefore, the circular cycle of risk transfer is actually broken. Right? So liquidity is something that we have to solve alongside the problem of access. But I think we'd like to think at least at Fundnel that we have done good work in solving for access, so being able to invest in the best top private companies globally. And liquidity is the next problem that we're looking to solve. And we are actually really obsessed with solving it. So much so that we even invested together with traditional brokerages in a private securities exchange that is licensed by the MES. And with the private exchange, essentially, we want to solve these two issues and make the private markets and alternative assets accessible to more people.
And just to help my audience, MAS means the Monetary Authority of Singapore, and they're pretty well known for their regulation all over the world, from the Project Pulau Ubin, which is the local cryptocurrency project that is now being used as a case study for the MIT site. So I want to sort of go back to your early days. What are your early days like when you first start the business 7 years ago? And also in today's world, what do you think your vision and mission for Fundnel is now?
We knew that this problem that we were trying to solve wasn't going to be an easy one. We were tackling established FIs and the big boys with unlimited, at least a lot more capital than we did. So we needed to be in this for the long haul, and advisors will need to stay as lean as possible and be smart as possible until the last race, right? So it wasn't a sprint, it was really about surviving. And at that point in time, people were not, unlike now, convinced that there was a market for private investment or private capital markets. Wasn't a thing. And only now you start seeing traditional investment banks starting private capital markets. And for us, we always knew there was a market for private investments. These were the same bunch of people that we were trying to serve, as I mentioned, when I was doing time in investment banking, in the boss bracket investment banks. But they were just consuming our product, the capital markets product, very differently. They were a generation of entrepreneurs that grew up differently. That are now interacting with the capital markets differently, that are staying private longer. And if you think about the private market, isn't actually a market, right? So we measure it to be a very efficient marketplace like the public exchanges that we are used to. But actually, they're more like mazes, and people have to navigate themselves within the maze. And really, as long as they find the asset class that they're in, depending on who they were, who they knew, they would be, and it was only for institutional investors or high net worth individuals to provide access, right? So that was our biggest challenge when we first started. Like, look, this is a tough problem. I need big minds. I need guys with unlimited drive. But we must know that this is a problem that will help not just enrich the rich people who already have access to this, but really by creating a vibrant market for private companies which employ majority of the people in any country, by creating an avenue for more people to actually invest in these private capital markets, to align, as I mentioned earlier, their personal portfolios into this asset class, actually becomes a very self-sustaining capital markets ecosystem that actually leads subsequently to jobs creation and a lot more economic growth that is more sustainable. And I think if you go back to the purpose of capital markets and entrepreneurship, is very closely linked, whereby without a vibrant capital markets, you actually won't see a lot more people from school, as I mentioned, taking risks, creating companies, trashing out ideas, because if the capital markets don't support the liquidity event, the exits, then there'll be less and less appealing for people to actually take risks and start companies. Yeah, so I think that's something that biggest challenge when we first started, we had to overcome.
Then after that, now today, what do you view your vision and mission for Fundnel looks like then?
Yeah, so I think the way we thought about vision and mission really is, we call it as an enabler. So using the technology pieces that we've built, localizing it for various markets. So besides Singapore, we're also operating and licensed in Malaysia, Indonesia, expanding into new markets. So the technology pieces that we built, we will provide cost and time efficient access to growth capital, private companies around us. So new generation entrepreneurs, starting these companies won't be stuck with just an option of either an initial public offering IPO or a trade sale / M&A as their only two exit options. The way we think about success and in the future is really breaking the monopoly of the rich by providing access to private equity as an asset class for the average person, facilitating investments in local businesses. So not just thinking about tech companies, but thinking about even the essential businesses, the SMEs that we love so much that during the pandemic actually became essential businesses serving us. And these companies, these entrepreneurs don't start these companies to become tech unicorns. They start these businesses actually because they want to serve the community, right? Can we actually create a vibrant capital markets for them with our technology pieces, right? So we think about how, when plugged into emerging countries around the world, so maybe don't think about Singapore, think about maybe other capital markets, maybe even in Greece as an example, and then the gelato shops or the chain of F&B outlets that are serving the local communities. Can we create a hyper-local funding ecosystem or capital markets, right, that will empower gainful employment and therefore create jobs in these countries, right? Or if you think about tech businesses, can we help roll the dice by backing founders solving hard problems? So enable them to actually have capital that will help us in our lifetime and our children's lifetime create value for longer term growth. So that's how I think about success. It's really about longevity of the capital markets infrastructure and the pieces that we've built in serving the new generation of entrepreneurs and a new generation of investors.
You alluded earlier the customers of Fundnel is actually the institutions, individuals who may be interested in investing into private companies and hence open up the access to everyone else. Does the customers need to be accredited before investing into private companies anywhere?
So the core customer, I would say that we left traditional FIs or investment banks to serve really are not just the high net worth and institutional investors, but really everyone, the mass affluent, including retail. Obviously, different countries have different regulations concerning who can actually invest in the asset class. So as an example, in Malaysia, we do actually have a license for retail investors to actually participate in private equity or private investments, subject to a cap on the limit that each retail investors are able to invest per year, unless they actually upgrade their status to become an accredited investor. So I think there are shades of grey for different countries that we operate in. We are also regulated in Singapore, and it is currently the strictest jurisdiction that we hold a license to. And therefore, if any investor from various parts of the world want to invest in our international deals that is licensed by the Singapore entity, that investor would have to upgrade their status to comply with Singapore standards. And for now, that status is an accredited investor as the minimum before they can actually start investing in deals.
Interesting you mentioned that because I was doing my accreditation in Fundnel today, and it was exactly the same accreditation that was required for me to even invest in US companies, say through angel list syndicates as well. So it's kind of more common standards across the world, even with what is happening in the US as well. So one interesting thing is in your journey, can you talk about the investors who have backed Fundnel so far and how did they help you in building the company in the process?
Sure. So I think a couple of our key investors would also mirror the unique position that we find ourselves in. So we have people on our cap table ranging from traditional top-tier brokerage houses like Phillip Securities, which for people who are trading public securities in the region, I think they're one of the largest brokerages in Southeast Asia, probably number one market makers and trading volume on the Singapore Exchange. We have traditional investment banks like Nomura Investment Bank on our cap table. We have a top-tier corporate finance house who is probably the largest underwriter and sponsor for IPOs on the Catalyst board in Singapore, Prime Partners as well. And then on the other end of the spectrum, we have obviously VC funds like Diamond Asia or now known as Integra Partners and Majuven as well for our VC funds on our cap table. And a little maybe known or unknown secret is that we actually we have also been invested by Binance Asia. So I think this is how we shape our cap table to reflect the unique position that I think our licensed platform and exchange is in, blending old world financial institutions from brokerage houses to investment banks to corporate finance houses with newer world VCs and then subsequently even crypto exchange powerhouse.
And then you also have family officers and all that, also that who was part of that process as well, right?
Yeah, that's progress.
One interesting thing, and I know you are very humble and seldom talk about it, but I'm gonna get you to. Can you share some highlights of Fundnel over the past few years, and also the recent launch of your new fund with BRI Ventures to jumpstart Indonesia startup investment?
Yeah, no, sure. I think it's been a really interesting period for us during COVID. Obviously, a lot of businesses were suffering, and we were really, really unsure going into the lockdown as well, ourselves in Funnel. But because I think we were online first, and as I mentioned earlier, we were very lean when we started. We never had the luxury of excess resources, pounding the pavement to do deal sourcing or investments. We were really lucky that due to the lack of travel allowed between fragmented Southeast Asia, we found ourselves being approached by many, many global issuers, companies, and funds. And they started approaching us with partnerships to actually distribute their securities, their funds into our region. And as a result of that, in terms of deals closure, we've actually completed over 600 million US transactions and over 1,000 investment tickets completed on the platform as of December last year. And this is something that brings us slightly closer, maybe about 60% to our BHAG number of actually completing 1 billion transactions by 2025. So I think I'm quite excited that we are close to hitting the $1 billion number. But also more excited, exactly what you said about the new fund that we launched with BRI Ventures. Remember, I mentioned that we're obsessed about solving for liquidity. I think BRI Ventures Secondaries Fund is a step in that direction, whereby helping founders, employees, early investors exit, creating liquidity for these investors or even employees. Firstly, we hope that we are able to allow them, with the proceeds received, to reinvest in the private markets ecosystem. Exactly what you mentioned, AngelList. It's only mostly the people who have been a participant of the private markets see the value that private markets can create with their own investment. And by bringing on partners like BRI, who is one of the largest, CVCs in Indonesia, and definitely one of the more established VC funds there, we are able to get a very, very strong pipeline of Indonesian growth companies. Again, one of the hottest parts of the world that a lot of funds and emerging managers would like to get access to. Must come with localized partners. So I think that's how we think about our partnership with BRI. And this is really kind of emphasizes enough importance of partnering with people who are aligned with us on solving this issue. Is something that I am most excited about for the next couple of years.
So how does Fundnel source the deals for the investors to buy in? I mean, you have done some really interesting ones like secondary shares for, say, Grab, even SpaceX. I remember when we first met, that was one of the most interesting companies on your platform. So yeah,
so I think the way we thought about deals, because again, we didn't have the luxury of having a lot of headcount looking for deal origination, was that we relied a lot on technology. So we have three main methods for getting deals: inbound, outbound, and rebound. So inbound is really where, obviously through our own networks, investors who have traded with us or before over the many years with our track record, the inbound these days are pretty strong. On top of, as I mentioned earlier, because of the lockdown, a lot of the global funds and global issuers were not traveling to the region. So again, coming through us, given our dominant position in the market, really, really accelerated inbound of opportunities. Plus, it helps that we have the exchange together with traditional FIs I mentioned. They bring these FIs their own clients and deal flow as well. So the inbound, method of deal origination is super strong. The next method is really outbound. So again, because of our lean headcount, we actually rely a lot more on data, which is constantly looking at not just the 19,000 investors on our network, what these investors are looking for, what have they invested in, how do they interact on our platform, what kind of deals are they most excited about, but also outside the platform. So investors who are not within our network, the data system actually scrubs the universe of investors, looking for trends, looking for top tier companies that we should target. And if we do originate these companies, we are pretty confident there's actually a likelihood of investment, a score assigned to every investor that we actually look at before we decide whether or not to spend time cultivating the relationships. And the third method is really rebound. So it's really where we differ a lot from traditional VCs or PEs, whereby unlike a human-based investment team, once you reject a company that you have looked at, you probably forget about them. But because our first step in every single deal origination that we do is converting unstructured data into a structured format on our system. The system never forgets this company, and the system will constantly look at news reports or even, as I mentioned earlier, macro trends, investor flavor of the year or month. And if anything positive about the sector or the company happens around the world, the system will actually reflect to us, and our team will actually then approach these companies to re-engage them again. So that's a rebound.
Wow, that's actually a pretty complex process. One function I thought was very interested in Fundnel in the private markets is that it actually unlocks liquidity for startup founders and employees. How does the platform help them to unlock that liquidity?
The way we think about liquidity, there are actually three segments or groups of people that we can actually support. The first group is actually early, and the way that is supported is really by helping them exit because of either fund life. So they're coming to an end of the fund life, and as I mentioned, as companies stay private longer, there is a need to actually return money to their LPs. So that was how we first started in 2018, helping all these early investors recycle capital for their funds to return to LPs. The second group of people that we can serve is really the employees that have actually maybe either exercised their options, vested shares. So I think you mentioned earlier, we did a lot of secondaries for Grab as an example. Some of them are actually employees who have left the company, they have moved on to the next big thing, or even need capital to support their next phase of growth personally. And that's where, with the support of the company, what we'll do is find a buyer for those shares. And then going through the process of the company, once that is approved, the share transfer is done at the company level. And the last group of people that we can serve is actually the founders. And I think that's where the BRI fund, as an example, we're focused on. And founders really, as captain of the ship, oftentimes are viewed as the last person holding on to the boat. But that doesn't necessarily have to be 100% always true. We do think that with liquidity, there will be a renewed energy and fire for some of these guys to actually spend a lot more of their personal energy and time. They're really trading your life away for building something that you believe in. I'm not actually advocating for a large exit. I'm actually saying that it will actually benefit the company if the founders actually are able to monetize a bit of their shares that they have earned over the many, many years they've built the company. And by focusing on the founders, helping these people unlock liquidity, we actually think that it becomes a very mutually reinforcing positive cycle for employees as well, and allowing them to stay committed in the startups or private companies' mission. I think Carta, as an example, in the US, talks a lot about this, and it's really one of the core parts of employee retention program that I think a lot more companies in this part of the world should start looking at. And we are seeing a lot more companies led by the founders themselves look at this, offering this employee or even company liquidity program for the three groups of people I talked about.
So while this type of events are actually becoming very common in the US through Carta or second market, what's the frequency like in Southeast Asia or even Asia Pacific as a whole?
So I think, second market, mostly, if you think about it, is going to be a company tender process. So it's a one-time trade. Carta, on the other hand, is looking more for employee liquidity and really thinking about it from a trading point of view. So being able to trade in and out of these companies is the method that we are also focusing on. There are a couple of ways to do, or we think that we are experimenting with to do this. When we think about frequency, if it's a one-time tender offer in line with what the company's objectives are, it may or may not serve the interest of, I guess, a new bunch of investors who have invested during the tender offer, but subsequently during the time whereby there is no tender offer in the market, are unable to actually sell ahead of the next liquidity event or tender offer. So I think that's something that is not as friendly. That being said, there are pros and cons to both tender offer versus direct trading of companies directly on the exchanges that we're working on. And I think with the new wave of new group of people, new generation of millennial investors who are smarter and more savvy, a lot of them are actually thinking about adding these alternative investors. You mentioned SpaceX just now. A lot of them, I think, will want to invest in companies that they relate to, sustainable companies, etc., but maybe not at a ticket size millions of dollars, which are not as palatable or achievable for most people, but hopefully at a much smaller ticket size that is more comfortable for them, and that allows the market to trade in and out freely. So a lot of them actually starting to look at this, how best to add this alternative asset in their portfolio. A lot of FIs, a lot of brokerage houses are also starting to create products around this. And a lot of companies have also started thinking about even going as far as tokenizing the ESOP program that has some legs to it.
So if I'm a founder of a private company and I want to initiate a liquidity unlock event, how do I approach Fundnel? And what are the things I need to think as a founder before coming to you? For example, maybe price discovery of the liquidity event.
So there are a couple of ways you can do so. So I think there is company liquidity program that is as good as allowing the company free rein to decide how best to allocate whatever demand that is available on the exchange. So for instance, the exchange, will see $10 million worth of demand for your company shares. The company then decides to allocate that $10 million between the different groups of people I mentioned, so early investors, employees, and founders. And mind you, not all three groups may have different objectives, and the allocation decision will serve different needs for different companies at different stages of their lives, essentially. So that's one method. The second method really is individual sales. So being able to, for instance, pledge or custodize a portion of their shares. And by custodizing those shares, we can actually then digitize the shares. And by digitizing the shares, we're then able to list it on the exchange. Once it's listed, again, bids will come from various investors across the brokerage network, so member firms of the exchange or even within Fundnel. And once a bid is received, the seller then decides whether or not to transact based on the bids received. So those are the three methods.
So for private markets, what are the mental models for valuation? Because it feels like an art in startups below Series B and a science after Series B to mezzanine or even pre-IPO stage.
Sure. So I think one of the interesting things about or the differences between the public and private markets is that unlike the public markets, whereby the valuation of a company is really measured by the last traded price. So what was the last traded price times the number of shares outstanding gives you the valuation of a company in the public world. But in the private markets, whereby if you think about information asymmetry, a lot more gaps or in information disclosure are present, or inefficiencies are present in private markets. And therefore, the person with the most information on the private company, which is usually the lead investor, sets the valuation of a private company. Anyone else that trades on the private markets, usually in smaller block sizes with less information to price around, theoretically is not actually moving the valuation of a company. And I think that's how we think about the three reference prices that we have in the private markets. The last round price, which is, as I mentioned, set by the lead investor with the most information from the previous round. The demand and supply price, which is really the market price, depending on the availability of shares in the market and amount of buyers in the market looking for the particular shares. So sometimes that trades at a premium to the last round price. Majority of cases that we see, at least in Asia, is at a discount to last round price. We're really factoring in the fact that there is information asymmetry. The last reference price in the private markets really is the next round price. And the next round price really is about expectations. So most of the time, I would say private markets trade on rumors. When there's expectations that a merger will happen or listing will happen, an exit event will happen, I think a lot more people have a view on where the next round price will be, who could be a potential buyer of this particular company as an example. And that's where the market starts to move from the first two prices, last round and demand supply price, to the theoreticized next round price.
And then what are the trends for private markets in Southeast Asia look like? Because one thing I'm pretty sure now is startup founders and employees understanding there are new options opening to them. For example, there are different exit options through SPACs or through even direct listing.
Yeah, sure. So I think, thank God, the SPAC trend is behind us. I think it's going to be quite selective going forward on companies that will be eligible to create SPACs and list through them. The way we're actually seeing this play out really is in the form of the market looking at the capital markets as a support mechanism for creating and encouraging entrepreneurship. So I think a point I mentioned earlier that's the core purpose of capital markets, the core purpose of exchanges must be to create jobs. If it's not creating jobs, if it's really just trading derivatives, then where is the value creation? If it's not encouraging the new generation of investors, allowing them to put money behind companies that they relate to, that they are supporting, because these companies are solving problems that will impact us in the next 10 years, 20 years. Everyone is just focused on REITs or yield products, at least in Asia. then there's no one who's going to be rewarding companies that are investing in capex. No one's going to be rewarding companies that are investing in the future. Everyone just wants to be paid a dividend. Then I think the options available for startup founders and employees for exits will be very, very different. So thankfully, that is changing. Prior to the pandemic, I think what I described was really the lack of options. But today, especially with tokenization as a means for a faster transfer of shares, we're actually seeing a different picture emerge. There are actually less and less companies are thinking about IPO as the only way of exit. And I think even in the West, so I think some of these companies, you mentioned SpaceX as well, have been staying private longer and have used their own internal employee tender offers for liquidity programs to actually incentivize employees to stay longer with the companies. So the pressure to go public for the wrong reasons is less intense. And I think if that continues, more and more companies hopefully will stay private, and we hope to be able to support these companies with many options for liquidity.
So we live in interesting times. With the recent rate hikes to curb rising inflation, the market has triggered an economic downturn. I think if you talk to any entrepreneurs today, in the timing we are, most VCs are deliberately turning off their taps and letting their startups either rise or go underwater, given that now they have the upper hand on valuation now. What would be your advice to entrepreneurs and capital allocators out there in thinking about this current times?
I think that's an interesting point. And I think exactly what you said, people who have been toying and burning are starting to be a lot more conservative. So you will see a lot more startups even cutting their costs, tightening their belts. Many VCs have published papers on this issue, but really thinking about how to survive, as I mentioned, this marathon, which is how we started our company, and how this affects the new generation of entrepreneurs when they build their business today, right? Are they going to be thinking about raising capital to burn? Are they going to be thinking about crazy valuations for their seed round or Series A round? Or are they going to be thinking about, okay, I'm not here just to play the same VC game that has played out for the past 10 years. I'm actually here to make a difference, right? And because of that, when we really distill it to the best companies around, are the real ones creating real value, making a difference. It's not just a copycat platform that is copying what has worked in the US and trying to localize it for the US. We're actually looking at VCs who are emerging managers, really backing founders, solving hard problems, right? And this is, again, not a copycat game. It's not about raising money to mirror, to burn, but it's really about, okay, I'm actually going to put capital to work to shape the communities around me that will then serve the greater interest. So I think we're seeing a lot more of that today. And if you think about the flight to real quality assets, there is actually a more interesting correlation where during this time of inflation, real assets, which is hard assets, so including even property as an example or commodities as an example, real assets are actually very well correlated to inflation. So I think a lot more companies are innovating around real assets. We see that being reflected in the way VCs deploy as well.
So my final question to you then is, what does great look like for Fundnel in the next decade?
I think I mentioned my vivid descriptions of our future. If we do succeed, being able to really become an integral part of the capital markets in any country that employ our technology pieces, therefore really empowering gainful employment by SMEs and allowing private equity as an asset class to really become a mainstay in the average investor's portfolio. So that's how we think about success. We're not thinking about this in the short term, not really thinking about this to do like the flipping game, essentially, like whereby people build companies to sell. We're thinking about it as, if we succeed, the new generation of our kids' generation, especially when they are in school, they start their companies together. They say, hey, I can actually use the platform or the exchange that we have built to raise capital and create liquidity events, incentivize my employees. And the new generation will be, therefore, hopefully incentivized to start creating new companies and discoveries again.
As you already alluded right at the start, we're going to do the biosphere through Fundnel in the future.
This is something definitely close to heart. It was such a coincidence that we managed to talk about this as well.
I think a lot of my audience out there will be trying to figure out what is this biosphere project that Bernard and Kelvin is talking about. But if you ever join both of us for beers, you will know. And the strange thing was that I have been thinking about that problem independently for the last 20, 30 years. Even using most of my fellow scientists as sounding board during the days when I was working in the Human Genome Project.
Yep.
Okay. Kelvin, many thanks for coming on the show, and this is really a great conversation, and you actually taught me a lot of things about thinking about valuation And I really, really enjoyed this conversation. But in closing, there are two things I have to ask. First, any recommendations that have inspired you recently?
Inspired me recently. So I think one of the last books I read was a pretty interesting book called Backable. It actually breaks down what makes a person backable with many, many actionable strategies. So I think that's something that, as I mentioned earlier, like a startup is really a journey of self-discovery. And by distilling success or successful raises, how people back people, we can actually all learn to become better entrepreneurs. And that's something that I'm personally I'm lacking at. So I need to work on more. Yeah, so I think that's something interesting. I think I mentioned the other movie recently that I watched was the $1 Billion Code on Netflix, which talks about a bunch of guys who built the earlier version of, well, it was contested, but the earlier version of Google Earth that was pretty interesting as well.
And how do my audience find you?
How do your audience find me?
LinkedIn?
Yeah, I mean, definitely LinkedIn anytime or through you, right?
Or through your website, Fundnel. I think it's fundnel.com. Or you want to name it for it?
Yes, thank you. Yeah.
Okay, many thanks for coming on the show. And for my audience out there, you can definitely find us on any podcast platforms out there. If you're going to Apple Podcasts, please give us a 5-star rating and give us a review so that we can be easily discoverable by everyone else in the world. Kelvin, once again, thank you for coming on the show. I'm pretty sure we're going to have another conversation again.
Thanks, Bernard.
Run it.